Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rice Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Is all I got to say. Be quiet. Don't say nothing to nobody. Good evening, everybody. If this is your first time tuning into Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning into Tim's Tidbits, I still want to say welcome, but give you a nice hearty thank you for always tuning into Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's just big spot if you know hablo español. And you're now in tune to another episode of the Intraday Price Action Recap. This episode of the Price Action Recap being brought to you by none other than myself, the creator of the Smart Money Manuscript. If you want to learn how to look at these candles on the chart and interpret where price is going to go, and learn to trade things like options and futures and stocks, and maybe if you just want to be an investor, $69.99 at the first link in the description below, right? I don't know where y'all description is, but my description usually be below the video. So go to that first link in the description, click on it. That'd be the best $69.99 you ever spent, because not only do you get a wealth of knowledge. Hey, why do I look frozen? Why do I look frozen on YouTube? Was I frozen on YouTube, or is that just my lag? And then when I tell it to go live, it gave me a commercial. You freezing. You said I was freezing?
Yeah, you're freezing over there on YouTube.
It looks frozen on YouTube. Okay. Hopefully it rectified itself there. Hopefully it rectified itself. All right, to then. So, oh yeah, not only do you get access to a wealth of knowledge, you get access to me every second Saturday of the month at 12 p.m. Eastern Standard Time. We do a live Q&A inside the course. It's not a pre-recorded thing. It's not a fact section where you go search for answers to your questions. You talk directly to me, the course creator, for no additional charge, just that $69.99 that you pay for the course. Hey, why not? Go check it out. Do yourself a favor. Now, let's get into it, man. I ain't gonna be before long yet. Be in front of y'all long today. Oh, we got a light crowd in here today. We got Mike Pence fly up in here hanging out with Empire Traders. We got Lump hanging out in here. I see a couple people over there on YouTube, but ain't nobody in the chat besides Lump. So hey, let's go and get to it. I guess everybody hanging out doing their thing. Ain't nobody expect me to do nothing today, you know. Everybody was like, hey, Tim said he wasn't gonna do nothing, so we're gonna go out and hang out with our family on this Friday. So we just go ahead and get to it real quick. And hey, it is what it is. They missed it. And maybe if it turned out to be a good one, I might just get in my feelings and delete it because ain't nobody here. let's see, let's see how that goes. Let's see how that goes. How that play out. How about that? Huh? Hey man, if you turn your attention on to that screen right over there, if you're on YouTube, it's that screen over there. If you're on Zoom, I think it just go full screen. I'm not sure how it do when you're on Zoom, but if you're on YouTube, take a gander at that screen right over there. Right over there. Now, you see, when I came in, I was like this right here. And why was I like that? Why was I mocking the little um shush faces? Right? Why was I mocking the little shush faces? Why do I have these little eyeballs looking at the price right there on that line right there with little shush faces like that? Just be quiet and do the work. No matter what the haters say, right? No matter what the haters say, right? If the haters, if the haters want to come out there and, you know, jaw jack, if the haters want to get in the comments, if the haters want to, you know, be in other people's streams when you be in there, if the haters want to, you know, try to hijack your posts if you do stuff on social media, if the haters always in your pocket and asking you to show broker statements, and if they coming into your live stream saying that they got $20,000 for anybody that can show them this and show them that, and yeah, just stay quiet and do the work. Because guess what? Time is going to separate the wheat from the tare. Time. You ain't got to try to go through and separate the wheat from the tare. Time will separate the wheat from the tare. Right? Because if you know what you're doing, if you know what you're looking at, if you know what you're talking about, you know why you pushing the button, right? Time is gonna the work gonna speak for itself, man. Over the period of time. Anybody can come out here and talk smack and show off and do things once or twice. But when you just stay quiet and you grind and you do it over and over and over and over and over, it speaks for itself. It speaks for itself. It's not about the size of your YouTube channel, right? It's not about how many members you got in your Discord. It's not about any of that stuff. It's about staying quiet, keeping your head down, and doing the work. Because you know what? As long as you stay quiet, keep your head down and do the work, can't nobody take that away from you. They can't take nothing, everything that's inside here, they can't take that away from you. You know what I'm saying? They can run a smear campaign on you. They can get on your nerve. They can make you not want to get on social media. They can do the work. Now, got them eyeballs resting over there. Why? Because before price even started this move here, right? We was talking about these relative equal highs right there. Right. And then we already know why we put these quadrants on there. We talked about why we put them quadrants on there. All right. For those who wasn't present when we talked about that, those quadrants, right? The top of this and the bottom of this is the highest high that was created within a 20-day look back. This is the lowest low that was created within a 20-day look back. All right. Which way my arm be pointing when I need a point like this right here? Look back. Right. So that there, 20-day look back. Right. 20-day look back. And then the blue, red, and blue lines in between that high and that low. This is the lower quadrant of a 20-day look back. This is equilibrium, 20-day look back. This is the upper quadrant, 20-day look back. That's what those lines are for, right? The little dashed lines here, right? The dashed lines, those are our short-term dealing range based off of a intermediate term low right here, right? So based off that intermediate term low, right? And based off the fact where it was created right here around equilibrium, after we had traded up to the upper quadrant of the 20-day look back, right? We'll talk about how that low should stay in place. And if that low stays in place, right, now we're looking at our original draw all over again, right? This was always the draw, right? But once we got something etched in stone from an algorithmic standpoint, now we have another dealing range that we're looking at to look for trading opportunities, right? Just like you look for trading opportunities at the quadrants of the 20-day look back, right? Now that we've gotten over here, right, we're just fine tuning, right? These are for, let's say this is an intraday dealing range because we're fine tuning this portion to look for trading opportunities at these quadrant levels for intraday trading, right? This right here, you're looking for trading opportunities based on like the higher time frame. You're looking at like a broader span of time because it's a 20-day look back. So you're looking back over 20 days. So it can be something where you're looking at trade in a couple of days, trade in a week or two, trade. This is a broader range that you're looking to trade, right? So you're looking back 20 days. So you're looking to trade this or like if you got into a position early, you can be looking to hold it up to 20 days in the future because it's a 20-day look back and 20-day look forward. So within that span, you're anticipating price to engage these PD arrays that's landing in this 20-day look back. Ooh, I don't think y'all heard what I said. I ain't even gonna repeat it. Oh, that boy be cooking every night. That boy be cooking. Oh my goodness. I'm so tired of being, it's getting hot in this kitchen. It's getting hot in it. I'm so tired of, I'm so tired of being alone. I'm so tired of. Hey, man. Let's talk about today's price action, man. If you notice, we got some other stuff on the screen here, right? You see these lines here look like some Fibonacci extensions right here. I don't know if y'all can see. I don't know if they showing up all that good on, yeah. But I can see it on the screen. Yeah, I can see it. Right. Look at some Fibonacci extensions. And then this right here look like some Fibonacci extensions too. If you thought that, you'll be correct. Right. So what are these Fibonacci extensions for? Right. You see they're right here, right there. At 8:30 today, when the news came out, the inflation data came out, market went on ahead, skyrocketed, and took out our draw on liquidity. Boom! Hit it. Right. Once we reach our draw on liquidity, we ain't trying to force nothing, especially on a Friday. We ain't trying to force nothing at all. We ain't trying to say, hey, we fund the reverse. We ain't trying to say, hey, we fund the blast off. We just chilling on Friday. Right. But if you want to dabble, right, you want to have some algorithmic principles to dabble upon. All right. So let's go in here. I'm going to I don't know why that one is showing on that time frame, because it only should be showing here and lower. All right. Maybe I forgot to do that earlier today. Right. So looking at this 60-minute time frame, right? And if I squanch up the chart like this right here, okay. If I squanch up the chart here, right, you'll see, remember we talked about that low right there, right? Because this, let me hide this, right? So if you can see these dots, I don't know if y'all can see the dots, right? But the dots show you where that Fibonacci tool is anchored, right? See that little dot there? That little dot there shows you where that Fibonacci tool is anchored, right? This is the one that's anchored at that intermediate term low, and where we think is going back to the high. So this is our implied dealing range, right? And we're anticipating for setups to happen at these quadrants, right? That right there is a gold mine within itself, right? We've talked about this time and time again in the past, where, we have quadrants and we buy in a discount and sell in a premium, you know what I'm saying? But these quadrants are the places where you're anticipating stuff to happen in the future, right? Where you anticipate stuff to happen in the future. That's how you use I'm saying this again because that's a gold mine within itself, right? Now you can't just put the Fibonacci tool on there and throw some quads on it and be like, oh, it's got to be algorithmic. Remember, stacks on stacks on stacks on stacks, blocks on blocks on blocks on blocks, right? So once you understand your dealing range, now you understand where to look for opportunities, right? You're looking for opportunities at these quadrants, right? And the gem that Michael gave us the other day was between the lower quadrant up to the upper quadrant, right? This is where you're looking to gather the biggest portion of your move. That's where you're looking to take the lion's share of your trading, right? When you're down here or when you up here, right? That ain't where you looking to get involved. Inside this area here is where you looking to get involved, okay? Right? And time and price is fractal, so remember that. Don't never forget it. Now, looking at this, if you notice, right, there's a dot here and a dot here. All right. Now, we had already spoke about, right? We had already spoke about this low right here, right? What do we say was special about that low, right? We said that right there was an intermediate term low, right? That's one thing that's special about it, right? Another thing that's special about it, we came down and we swept out all this liquidity and traded down, right, into an anticipatory reactionary point, right? A bullish PD rate in a discount, you know? So since we came down to an anticipatory reactionary point, right? And then we didn't take out that low, right? And created another low over here. Once we traded up above that high right there, now, right? Now we understand this low to be important, right? Because we got short-term lows over here, short-term lows over here, short-term low right there, right? We understand that low to be important, right? Now, excuse me. Now that we understand that to be an intermediate term low, we can reach into our bag of tricks down here. This is our tool belt down here, right? And we can grab this right here. It's called a fib retracement tool. I like to call it a Fibonacci tool. We can grab that Fibonacci tool, right? We can go in here and we can set it to projection. In this case, I'm looking for a bullish projection, right? TLR bullish, projections bullish. We can click on that, right? Now, since we're looking for a bullish projection, right, I have my numbers inside my fib set to negative numbers so that when I project it, I want to anchor it and pull it, right? I want to anchor it at an intermediate term low or high. And then I want to pull it in the direction that I want to project. And since I have negative numbers in there, then it will start projecting in that direction. And I'm going to stretch it from the intermediate term low back to the previous high. Boop, right there. Back to there. And when I stretch it to there, you notice I got a red line there and a green line there. I just hit the red and green line before. Now I have it broke down into half standard deviations inside my fib tool. I'll share that with you now, right? And you see I have negative numbers in there. See, I hit the one in the zero because I didn't want the red line and the green line sitting there, right? So I got 0, I got 1, I have negative 0.5, negative 1, negative 1.5, negative 2, negative 2.5, negative, y'all get it. It's going down in half a deviation steps, right? And I have negative numbers in there so that when I stretch it, it's stretching in the direction that I want to project. Okay. And why do I do that? Because when the algorithm gives you an important low or high at a algorithmic spot, right? A bullish PD array, right? This bullish PD, where's this bullish PD array resting? It's resting right here on that quadrant level of our 20-day look back. That's a very important PD array. That is a high probability ICT bullish order block. Why is that? Right? Because the algorithm has done something important. The algorithm came from a quadrant, dropped down to a quadrant, manipulated out sell side, then rallied back up and created a bullish order block on that quadrant level, right? So it's giving you signatures at algorithmic points. What makes that an algorithmic point? Because the algorithm knows that over there is the highest high, and that right there is the lowest low that was created in the last 20 days. And it understands that this is the lower quadrant, this is the equilibrium, that is the upper quadrant for the highest high and the lowest low over the last 20 days. So it's going to leave very important PD arrays at these quadrant levels, right? So when we trade back down into this ICT bullish order block, right? And we manipulate out some liquidity, right? And we trade up and set this order block, right? Trade down, set this order block at a particular level, go up into the upper quadrant, set relative equal highs, get a deeper retracement, stop at this bullish order block, and then create an intermediate term low. Now we know we could use that low as an anchor to project how far price can go beyond that high. All right. That's why that in this case right here, that's why that low right there is smiling, because he understands why he's so important. I smile because I'm important. I do. Right now, light skinned Deborah, girl, you scared me. I felt somebody staring at me, and I looked over, and it's light skinned Deborah staring at me. What's up, Marco? What'd you say?
Oh my God, you're so funny.
So, all right. And as you see here today, we actually came up to a half a standard deviation of that projection right there. I mean, from that anchor point right there, we came up a half a standard deviation, right? And that's what these were for. So if you are interested in trying to trade, now you have targets. Because why? These are all-time highs over here. We don't have a swing high to shoot for over there. So once we go past this right here, we need specific numbers that we can shoot for. So this half a standard deviation, you could put your target as 25,531 and a half. Because based off this algorithmic move, let's give him a mustache. Hey, I'm cool. I'm Ron Burgundy, the anchor man. Right? So now you got a target you can shoot for. All right, Tim, that's all fine and dandy. Let's talk about the other one that you had on there. Hey, remember what I said? Remember what I said about price being fractal? Right? Remember what I said about price being fractal? Let's go in and look at something, okay? All right. Look at the dotted line. See me click on that. You see that little circle there? Got a circle here. We got a circle there, right? I click on that Fibonacci tool right there. It's anchored right here at this 15-minute, this 4 a.m. 15-minute low right here. And it's anchored here on this 3:30 a.m. 15-minute high right there, right? Well, Tim, why is it anchored right there? I'm glad you asked that question, little Timmy Rogers. I'm glad you asked that question. If we look here, right? If we look right here at this 4 p.m. low right there, see how when we drop down into this right here and we failed to take out these lows over here, right? We failed to take them lows out right there, and then we rejected up there. Where did we drop down to right there? We dropped down below the midnight open, right? We dropped down below the midnight open after we had consolidated here, right? Traded down into the fair value gap and then displaced away, right? So now if we stretch this up right here, if we stretch this up like this right here, if we look at this little area right there, right, we have a bullish order block and a bullish propulsion block right here, right? So we drop down, do not take out these lows here that traded into the imbalance and the bullish order block and took off, and then we traded below. Come here. We traded below midnight, right? We traded below midnight, but we're respecting the bullish order block and the bullish propulsion block right there, right? Closing respecting that right there. All right, so we made that low. And then once we made that low right there, what did we do? We took off and took out that high. All right. Once we took out that high right there, right, we came back down. Right, we came back down. Actually, we made a low right there. I didn't pay that one no attention. But during the news candle, we wicked down, made a low, took off and took out that high. So now, right, we have this low here that didn't take out those lows, drop below midnight, right? That right there is a anticipatory reactionary point. Why? Because that's an opening price. We're bullish and we're dropping below the opening price. Anticipatory reactionary point. Why? Bullish order blocks, right? Bullish order blocks. Then we have a swing low over here, right? And then, well, like I said, we had one that didn't notice it, but I noticed that one. So we just put it there so his face looks right. I'm important, so I smile, right? What did I say? When you get that intermediate term low, you can grab your Fibonacci tool, all right? You can go in there to your projections. You can anchor it at that low. You could take it back to the previous high, anchor it there, right? And since I have mine with negative numbers, right, it's going to anchor it and pull it in the direction that I want to go, right? Like this. I want to project it up, so I pull it up, anchor it there. And then if you notice here, right, the algorithm, when it blasts off, when it made this low, it blasts off and it stopped just short of this 3.5 standard deviation right there. All right, pull it back down, boop, right there. Right. It created a bullish order block. Where did it create that bullish order block? It created that bullish order block right here on the 2 standard deviation, right? And where did price not close below for the rest of the day? That bullish order block right there. That was created on that 2 standard deviation. After price had displaced away from this balanced price range. Now the wick, yes, the wick did damage, dropped down below a 1.5, right? Right here on this 930 candle, right? Then over here on this 1045 candle, it dropped down to that 1.5 again, but no candles closed disrespecting that bullish order block that's resting right there on that deviation line, that 2 standard deviation line right there, right? And it made its way all the way up to a 4.5 point deviation by the end of the day. It wasn't a blast off. It wasn't, just super volatile, right? Because what did I say? I said today is don't force it Friday. Don't try to force anything, right? Is there money to have been made inside this chop slop back and forth? Yes, it is. Yes, it is. You could have gone in here with this fine-tuned, right? Because look at what price did. Let's go down to a 1 minute chart. Right? Let's look at a 1 minute chart and look at the fine-tuning. See, here's all my markings from this morning, right? When I was watching the chart, I did a little trading today. Nothing big, nothing fancy to write home to mom about. Did a little trading, took 2 trades, right? Took 2 trades today, one in one account, one in the other account. Nothing to write home to mom about. Yeah, I made some money, right? Made some money, had 2 trades, 2 successful trades. No big deal, right? Then I went outside and changed my oil, right? Now, look at the sensitivity of price to these magical fib lines that he put on the chart. If y'all can't see the sensitivity, I can't make you see it. All right. I can't make you see it. Remember what we said, right? The order block. Remember that order block? That order block was right. Matter of fact, let me go back to that 15-minute chart. Right. I'm going to go to that 15-minute chart. Okay. And I'm going to put, this is the entire order block from the highest high to the lowest low of that entire order block, that blue shaded area. right? That's the 15 candles. When we go to the 1 minute chart, right? This is going to be the 15 candles that makes up this bullish order block right here. And y'all see the close of the order block rest right there on that quadrant line. All right, right there on that quadrant line, right? If you know, if I got to move my fancy dancing for this. If I click here, the close of that is 24,457 and 3/4. That quadrant line is 24,457 and a half. So it's one tick above that quadrant line right there, the close on that candle. The low, I'm going to mark out, I'm mark out everything about this candle. I'll mark out everything about that candle right there, right? That's the low, right? That's the high. I'm just marking out everything about this candle. Don't ask me why, because I just feel like doing it now. I really didn't have no reason. I didn't have no plans on doing this, but I'm too deep now. I'm in too deep right now. All right. Right. I'm just marking out everything about this candle. Right. Why am I marking out everything about this candle? I don't know. It's just something about it that the algorithm respected. The price ain't never disrespected. So I want to know everything about this candle, right? When you're going in and you're studying price, you got to be very anal like this right here. This is how anal I am when it comes to studying the price action, right? When I see something that the algorithm respects, I always refer to the 4 pillars of that PD array, hour, day, anything, and the 4 pillars plus the midpoint, right? So the 4 pillars is the open, high, low, close, right? And then the midpoint is going to be the mean threshold of the consequent encroachment, right? So, and then the high and the low that's taken care of inside the 4 pillars. Right. I just want to know everything about it. Everything about them 15 candles. Okay. So now let's go back down to 1 minute candles. All right. So now looking at our quadrants, right? Those are very bright. Those are very bold. I wonder, can I edit them all at the same time? Yes, I can fade them back in the background. All right. So looking at our quadrants, these are the 15 candles right here. Remember that highlight? Get out of here, opening range gap. I don't need you. Wow. He's deleted. Okay, these are the 15 candles here that make up that order block, right? The order block is resting right here on that quadrant level, right there. So now, looking at what price did here, inside the creation of this order block, right? Price, this is the open. Price opened up. Y'all give me some colors. I'm making the open orange, so I ain't got to keep looking over there. I'm making the open orange. Open is going to be orange. Uh-oh. I want that to stay black. I want this to be orange. Deborah, give me some colors. The open
Close
is going
blue.
All right. Close going to be blue.
Blue.
All right.
Mean threshold gonna be green.
Green.
Yes.
These must be your colors you use.
I mean, hey, it just makes sense.
Okay.
What else?
High and a low.
High, we're gonna do uh, Mm. Help me out, lump. High? What color? He ain't even listening.
How about high green and the low red
What was
and the
that?
mean threshold be
What y'all need to help with?
something else?
A color?
And then the mean we're gonna change mean threshold to what?
pink.
We
Now go
Yeah,
through them colors
October.
again. Green.
green is the high,
Uh-huh.
because that I always put by side for green. Green
Okay.
high, red sell side, low,
Okay.
closed was
Ugh,
blue, open was
okay.
orange,
Okay.
then black. Okay, so
Okay.
these the 15 candles here, right? So we opened here, rallied up, made a high, right? First thing I straight up made a high, okay, came back down, we dropped down, made a low, we took out liquidity, right? Swept liquidity. Then we came back up. We came back up and we closed here. Okay, so boom. Open, rallied, made a high, dropped down, made a low, came back, closed right here. Right? Boom. That's just a down closed candle. So it's not an order block yet. Down closed candle. Then we came up and we offered, right? We traded up and we offered that price there, right? That's our change in the state delivery, right? As soon as we offered that price there, we offered the opening price. That's our change in the state delivery. That's when we, right? When we came up here, offered that opening price. Now it's technically an order block, right? Because we offered that price. We went up and we took out the high, right, of that order block there. Now, that's our now that it's an order block, now we're paying attention to the mean threshold also, right? Because now it's an order block. So now we're anticipating price to respect that mean threshold in a bullish sentiment. All right. So um so then that was 9. Boom. Right. So that's the next 15-minute candle right there. And then we finally traded above the high on this 15-minute candle there. All right. We break this down. We're gonna break it down. We're gonna break it down.
Hold that thought right there.
Yep.
So if I was on a 1 minute and I wanted to take a trade and see where that order block was made when it um let's see, almost to the orange line over here to the
You said almost to
um
the orange line.
uh-huh. Oh, the first down close candle, that order block, that bullish order. Let me come back to the right. Okay, yeah, right there. Okay,
Okay.
let's say if I would have got in a trade, and so I would have wrote it up there to the green line.
You say you getting in a trade here?
If I would have took a trade on the 1 minute and got in right there, I could have rode it up to the green line, but then I would have need to get out, right? Because it's coming back down.
Okay, what's making you take the trade right there?
Oh, I was just looking. I, I was just curious because I was just looking at how the candles was respecting that order block on that time frame up into a certain point.
Okay, so you're just looking at it like on a first touch basis,
Yeah.
based off of we've offered the opening price there. So now you're anticipating this to be used as a bullish order block because technically
Right.
it's an order block now. So you super aggressive and you're entering
Uh-huh.
here.
Because I anticipated going up, but yeah. Like if I want to take a quick
Yeah,
scalp.
you will be take coming off here
Right
because
there.
and
Yeah.
the reason why I'm saying that is because the offering this opening price and technically making this a bullish order block, right? That's a secondary supporting factor of that order block holding. Right? Because looking at it on the 1 minute time frame, right? You're looking at it as, right, we came down, right, set relative equal lows, traded back up into the SIBI, dropped down, took out those equal lows, right, and then traded back up and got a change in the state delivery,
yeah.
right? And so now we come up, we get a immediate rebalance, right? We trade up, get a small fair value gap, create an order block. So now when this candle come up here and close offering that price, now you're trading either as soon as this candle close or as soon as we trade into that opening price. So you're taking it based off of this with the supporting cast of we just technically created a 15-minute order block, and that should hold me back to here.
To that point, yeah.
Yes. Because you're trading based off of this range right here.
Right.
Yeah. Yes. All right.
So you saying that would have been a good entry for her, Tim? You saying that would have been good?
Yeah, off of this order block based off of what price did here, and then you're using the support and fact that on the higher time frame you're creating a bullish order block that the price is going to use later. You're just taking advantage of knowing, okay, price is bullish because it's creating a bullish order block, and based off what we've done here, right, I can trust this back to that high there because that's inside this range, right? And we've come down and manipulated out liquidity, right? Got a change in the state delivery. So now, right, we have all of this right here. We don't expect price to go back into that V. That's balanced out right there, right? And we come up here and we create an inversion fair value gap or get very close to it at this point, right? Set that order block, and then we come back up and trade back down into that order block there, right? We rally back up, right? So you're doing it based off what price is doing here. So you're trading within the constraints of this dealing range. You're not trying to stretch it out to that up there, right? That's what I be talking about when I be like trade within the bounds of what the dealing range that your thesis is coming from.
That's what I got faith for right now.
All right. And
a little piece.
We look at the opening back to there, right? What's that, 16? And that's, hey, that's good enough for me. That's over $300 right there on the NQ. You know what I'm saying? So, but yeah, so the order block, we see that there. Then I was marking out these other 15-minute candles so we can keep up with price on the 1 minute time frame without having to keep jumping back up. Why aren't these getting any darker? Let me fatten them up because they're not getting any darker. So we can see what's going on with these.
Did Michael help write the algorithm?
That's what he said. I could just take him.
Oh, he said that?
Yeah.
Yeah.
A lot of people don't believe him. A lot of people like calling cap, but I could just take him at his word. I ain't never seen nobody who do the stuff he do. So, you know what I'm saying? If I'm gonna believe some other people can off stuff that they say and the stuff they do ain't nowhere near this accurate, why can't I believe that he helped write? You know what I'm saying? Yeah. Why can't I believe that he helped write an algorithm? You know what I'm saying? What's the big deal about helping?
He definitely got the blueprint to it if he didn't write it.
You know what I'm saying? God dog it, Tim.
It looked like we were saying yesterday. I think that was Margot saying that. Well, when I was saying we need a nerd like you to go over it and get the knowledge and bring it back to us. But that was Margot. Somebody was saying that the way you broke it down, putting the
Seawalk.
That was Seawalk.
Okay. Yeah, I think that was Seawalk that said that. But I like Revenge of the Nerd. Yeah, okay. That's a nice way to put it. Nerd. Okay, yeah, I'll take that.
Brainiac.
Brainiac, I'll take that. All right, so I just broke it down over like 15-minute candle so we can see what price was doing, right? Because this was a 15-minute candle, so that's a 15-minute candle there, right? So we're just looking at how price going in between those candles, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Yeah, right. So in between these candles, right? So this is our order block, right? Once we offer this price, right? That's technically our order block now, right? We trade up, right? Go up to the high, right here. See our prices respect the mean threshold right there, right? We come up once we create it, sit on mean threshold, come back down, mean threshold, right? We're consolidating there on that opening price. So our price is sensitive to the 4 pillars of this PD array, right? Sensitive to the open, wicking down to mean threshold, right? We expand up, create a BISI, right? Expand up, create a BISI, trade above the high, close above the high, but then we immediately reverse and come back down, right? And then that's 15-minute candle. And inside this next 15-minute candle, we immediately reverse, right? Get a breaking market structure right there, right? Breaking market structure there. Then we drop down and take out the low, right? So we're taking out sell side there. We go below the low, right? And where do we stop? We stop right there on that 1.5 deviation line of our projection, right? Remember what we were saying. We closed on the -2, right? We closed on a 2 standard deviation, right? Once we traded up past the 2.5 and took out liquidity, right? We dropped down below sell side and poked below the 2 body close respect. I mean, the 1.5 body close respecting that 1.5, right? We opened up here on this 930 candle, dropped down below that low, right? And then immediately rallied back up, right? And come all the way back up just above the close. And then we dropped all the way back down, right? But then we opened up and we traded all the way back up to mean threshold, right? And mean threshold, that's right around the 930. Matter of fact, the open of this 15-minute candle is our 930 open, right? That's our 930 open. So we open up at 930, drop down, take out the sell side at that deviation, right? And then we rally all the way back up to the pre-market high, right? All the way back up to the pre-market high. Now, in relations to our order block, right? We come up to mean threshold, right? We open up, then we create an inversion fair value gap, right? Of that SIBI right there, create an inversion fair value gap of that SIBI right there. Then we rally up, right? Look like we poked above that high when we had took out that high, the one we closed above the high, right? We took out that high. Then once we took out that high, we dropped back down into the high one more time. Just like here, we dropped back down into mean threshold right there on that counter there, right? Once we dropped into the high, we went back up to the -3 standard deviation, right? We dropped down, didn't get an immediate rebalance, right? Then we rallied up, right? Closed inside the rejection block, right? And once we closed inside the rejection block, we poked above the pre-market buy side, which rests right there on that negative. I can't see what that is. -3.5, right? The pre-market high is right there at -3.5 right there, right? So we go up there, close right there at -3.5, open up again, trade down into the BISI, right? Close, not taking out that high. Then right here, we trade up above that high, poke above the high, drop down, drop back down to the -3, right? Trade back up, right? Don't take out that high, drop back down, come all the way down to mean threshold of the order block, right? So now This is a 15-minute candle. This is a 15-minute candle. This is a 15-minute candle. And we trade away from the order block, right? So we got the order block here, technically created it here, right? Traded above the high here on this 15-minute candle, right? And then on this 15-minute candle, we took liquidity and traded away from the order block, right? Inside here. So now inside this 15-minute candle, right? When we're getting ready to go into the macro time, we trade back down, right? Trade down to the opening price during the macro opening price, poke below mean threshold, and then we rally all the way back up and take out the buy side during the macro time, right? If you can't see the sensitivity in it, I mean, I can't do it for you, right? So we trade down, macro time. What happened? Time meets price. What is it meeting, right? ICT bullish order block, the opening price of the order block, mean threshold of the order block, right? Price rallies up and delivers to the buy side liquidity, trades all the way up to a -4 standard deviation. And if I'm not mistaken, I think that might be the high of the day. But let's check that out. Let me see. Nope, it's not. We went higher. We went to 4.5, right? I thought we went to 4, but we went to 4.5, right? So the 4 wasn't the high. But you see, we traded up here. Where do we go? To that 4 standard deviation from our projection, right? And then we came back down, right? Came back down, traded down into a 2.5, kissed the opening price of that order block, right? We kissed the opening price of that order block, traded back up to, what is that? 3.5. Yep, traded back up to 3.5, dropped back down, came all the way down to the low of our order block, right? Wicking down below it, coming down into the 1.5. Did not take out that low, right? Did not take out that low from 931, right? We dropped down to the 1.5, did not take out that low there, right? And again, that low, right? We had an intermediate term low there. We did not take it out. That was an intermediate term low when we traded back down into the order block also. Forgot to point that out, right? But we had an intermediate term low, traded back down to the order after trading away from the order block, trading back to it. That was intermediate term low, right? Then we came back, right? We came down, did not take out that low, right? Did not take out that low. And then we, right, made our way back, came up, close, right? We went from the open to the close, right? Poked above the open to that 2.5, dropped back down to the close at that 2, right? Poking below that low right there. This is 11:05. This right here is 11 o'clock. This right here started our macro time there. All right, let's get our macro time together. All right, so coming here during our macro time, we start our macro time, we drop down into the order block, right? Wick down to 1.5. Do not take out that low. Close right at the low of the order block. Open up, go back to the open of the order block, right? Trade down to the close, right? Trade up, take out the open up at there at a 2.5. Trade back down just below the close, taking out that low at the 2, right? Bouncing in between the open and the close there. Don't take out that low, right? Then we rally up, come back to the high above the 2.5, right? What do we notice right here? We have a bullish order block created on a quadrant line, that 2.5, right? Got a bullish fair value gap. I'm sorry. right? Counter 1, counter 2, counter 3, counter counter 2 is interacting with that quadrant line right there of our projection, right? Got bullish order block, bullish propulsion block, trade down into the propulsion block, into the order block, right? Respect the fair value gap, trade down, right? Again, into the wick of the propulsion block, right? So this one here, get a credit to the order block. This one here, get credit to the propulsion block. Either way it go, we're trading down into that area, respecting the lows, respecting the quadrant level. Then we rally up all the way back up, take out the buy side, right? Trade up, taking out the buy side, going up here to the 4.5, right? Standard deviation right there, right? After, and all of that, right? And all of that revolved around that bullish order block and our quadrants that was from our low. Come here, right? Our low right over here, right? I mean, our low, our projections based off of that low right there, right? That's what we anchored it at, projected up, right? And based off that projection with that bullish order block, that should support price, which it did, right? And then these are the deviations, right? Based off of this fine tuning, right? The dark line here was the deviation based off of the higher time frame. The dotted lines are the deviations on the fine tuning. Now, take that back up higher, right? The fat lines are based, the fat lines are based off of the 20-day look back, right? Standard deviations, right? The fat lines are based off the 20-day look back, standard deviations. The dash lines are based off the fine tuning for the intraday thing. Time and price is fractal, right? Don't matter what time frame you're looking at, as long as you look for algorithmic signatures and understand why you putting these tools on your screen, right? Stacks on stacks on stacks on stacks, blocks on blocks on blocks on blocks. Is there anybody who can't see what we was talking about today? Is there anybody where nothing that I said makes any sense right now? Don't be afraid. Speak up. If you can't see it, if you don't understand it, don't be afraid. Speak up. I don't bite. I don't bite. All hearts and minds are clear. All hearts and minds are clear. Oh, well, let the church say, hey, man.
Hey,
Let the church say, hey, man. Hey,
hey, man.
if all hearts and minds are clear, that's all I got, man. Hopefully, y'all got something out of this. Hopefully, y'all got something out of this. What in the look, your boy Delay. What in the world he looking at? Your boy Delay. You know,
Who you talking
Delay.
about? Melissa? I mean,
Linda, Lisa.
Lisa.
Look, hold on. Let me see. Can you see it? Yeah, you can see it. Watch what? When he come on. Can you see what the dude on the massage table?
Oh, yeah. Go full screen.
Oh, I ain't full screen?
No.
Oh, hold on. I thought I was full screen. My bad. Oh, I got dog. What happened? Oh, Lord, I don't. You know when you. Oh, there you go.
Wait a minute. Go back full. You're not full.
I ain't full.
There you go. You good. You good.
Uh, uh, oh, there it is. You see it?
There's a guy on the table, isn't there?
Yes, a dude on the table.
Man, come on, man.
And a dude on his back. Like, he must. Uh-oh. God dog it, Till. I'll try to turn it up.
Just send me the link. Let me see what he's talking about.
Hold on. I'm on the tail up. I would say so much. Let me show you. No, I say so much. President Zelensky helping him hunch the table. Get your ass up off that table, boy. Impregnating that day. Tearing that table ass out the frame. I was like, get off that table, boy. He teared that table out the frame. Hey, YouTube.
Man, what is he supposed to be doing? What is he?
It's a massage table, buddy. Oh, hold on. I'm getting this.
Is he helping him improve his stroke or something? What type? What's that? What is that? What is he helping him with, man? Is he supposed to be helping him with something?
I do not know.
Up his game? 18 again? What's the name of that class? Come on.
It ain't letting me. I'll try to put it in the Discord, but it ain't letting me put it in the Discord. So it's trying to make me sign in and all that. I'm gonna have to screen record because for some reason it don't let you look at delay stuff. I'm about to screen record it for you. But anyway, YouTube, that's all I got, man. Y'all anybody got anything for me? Let me see if my son. No, he ain't said nothing yet. I didn't go. I decided not to go to the game. Cause they were like, he was like, well, we ain't gonna get that to halftime. Like the band wasn't even. The band was like, we go. Oh, it said he at Cherokee Ave right now. All right, I'm about to be at y'all. My son back at the school. Let me see how long he did not text me and said it was head. Wait a minute before I. Okay. Oh, Calandra text. Band will be back at 7:45. Pick up. Have a great weekend. I guess since he saw that, he decided not to do nothing. Now, how you gonna decide not to? Now, your mama all the way in Jamaica, and you depending on her to send a message. Tell you, boy. All right, man. I appreciate y'all for hanging out with me. Hopefully, y'all got something out of this, man. I guess since light skinned Deborah showed. Wait a minute. It done went from light skinned Deborah to RN Deborah. I was gonna say, I guess since light skinned Deborah showed up, I say the video. But since RN Deborah back, I don't know if I'm gonna say the video now. I might have to delete this one. I want to really talk about it.
Yeah, I had put.
And then she on a cheap cell phone too. All right, y'all. Hey, man. Appreciate y'all for hanging out with me, man. Until the next time I decide to share my thoughts on this thing they call price action. It's your boy Tim Lee Rauchin, aka Planya Grundy. That's just big spot of hablo, man. Yo, y'all been safe out here in these trading streets, man. I'm gone.